We start this morning with the Federal Reserve's decision to hike U.S. rates to their highest level in a decade. Now, the move is the Federal Reserve's first major decision under its new chairman, Jerome Powell. For more on the hike and the impact it could have, our Seung-jae starts us off.
In the U.S. Central Bank's first major decision under its new chairman, Jerome Powell, on Wednesday, the Federal Reserve hiked its key interest rate from 1.5% to 1.75%, the highest level since 2008. It was the sixth rate increase since the Federal Open Market Committee began raising rates off near zero in December 2015. The move was widely expected as the U.S. economy continues to strengthen and Wall Street remains near record highs.
The job market remains strong, the economy continues to expand, and inflation appears to be moving toward the FOMC's 2% longer-run goal.
In addition, 3 rate hikes are anticipated for this year, but the Fed will pick up the pace even further in 2019. The Federal Reserve also significantly boosted its forecast for U.S. growth for 2018 and 2019. It says the U.S. economy is on pace to expand 2.7% this year and 2.4% the following year. The growth, according to Fed officials, will help lower the unemployment rate in the U.S. The jobless rate is expected to fall from 4.1% to 3.8% this year and to 3.6% in 2019, which would be the lowest level since 1969. The Fed's move also means U.S. rates will be higher than South Korea's for the first time in more than 10 years. The Bank of Korea currently has the nation's benchmark interest rate at 1.5%. Speaking on Wednesday at his confirmation hearing for a second term as BOK governor, Lee Ju-yeol said the country could face serious problems if the gap between the two widens too much. He added that if Korea raises rates to stay on par with the U.S., it could cause major issues in a country where households are saddled with a record $1.3 trillion of household debt as of last year. With the Federal Reserve gearing up for 3 more rate hikes before the year is out, global market analysts are closely monitoring their impact on the fragile global economy recovery. Seung-jae, Arirang News.